I never calculate my profit. I always calculate the loss instead, and then I see what the market gives me. So that is how you're going to be able to deal with your psychology. You just know that you follow your plan. If you follow your plan, even if you lose a trade, because you know that you're following your plan, your psychology won't be affected.
All right, welcome everyone to the Fiverr's YouTube channel. Today we're going to have an interview with Michael, who is a funded trader with us here at the Fiverr's. He is funded with a 100K high stakes account. He has had multiple payouts and he's a Nigerian trader now based in the UK, and he's an intraday trader. Welcome, Michael. Very nice to have you here on the YouTube channel. How are you? How are you today?
Nice to meet you, Jonathan. I'm doing very well. How are you doing as well?
I'm good. Doing really good and excited to speak with you today. Maybe we could start off with an introduction to yourself. You know, when did you start trading and how did you start trading?
So initially, I've heard about trading a long time ago, I think 2018. But what I found out then was just like pocket options. It's more like gambling. You just place a buy and you place a sell within a period of time. So I did that for a couple of weeks, and then I saw that wasn't what I wanted to do. So what I didn't do that time was I didn't try to seek knowledge and find out what trading was exactly. But fast forward to like 3 years back when I moved to the UK, I started earning decent money, and I was looking for a way to earn like a side income so I can at least not quit my job, but still do my job, but at least have something on the side. So I stumbled across trading, and then I started learning how to trade. I started from baby pips. I learned the proper way, try to make sure I don't want to get rich quick, make it like the rich get rich quick scheme. So I just try to take it gradually, and then after I thought I was confident, I started funding my account. So the problem was I funded my account with like $5,000, which was like a good amount of money, and I was practicing like a proper risk to reward, which was like I was risking, I think I was risking 1%, which was around about 50 US dollars, and then I was aiming for $100. So there was a mechanical strategy I was using then, which was working quite well. I think the first three trades were losses, and then the fourth trade was a win, but that day I didn't put my take profit. So I just left it, and then there was a news, I think it was CPI or something. So the trade ran all through while I was asleep. So I made like a 1 to 8. Yeah, I think 1 to 8 thereabout. I made like around $800, if it's not more than 1 to 8, I think $800. And then I saw it was quite a large amount of money, but I wouldn't have made that kind of money because I was doing like 1 to 2. So I realized that I need more money in order to be able to actually trade the proper way. So I heard about prop firms, but because of the rules, too many rules, I didn't give in. So later on, when I found out that capital is one of the major things we need in trading, so I decided to start with prop firms. So I tried a few prop firms which with their rules, trading conditions, and things like that, it was not really going well until I've been trading for like 3 years now. And then late last year, that was when I found out about 5%ers from prop firm match. I saw the live spread on because there's like a spread calculator there. I saw it was completely zero. So I was surprised because I haven't seen any prop giving zero pip spread on like GBP, USD, Euro USD, and things like that. I saw the trading condition was more than perfect. I saw the Trustpilot review as well was extremely good. Best in there was no problem that was beating Fiverr's. So after I carefully read about 5%ers and things like that, then I decided to go all in with 5%ers. So I took a few challenges, which I didn't actually fail them, but it's just because of I think the risk management. Sometimes the daily drawdown, because it's a challenge phase, I'm not trying to pass it at one go, but I'm not trying to pass it in like a year, if you know what I mean. So I was taking it slightly aggressive, but not too aggressive. I think maximum, I was risking maximum of 2% per trade on the challenge phase. So sometimes I hit like daily drawdown and then I lose the account. But because I have a plan that I am following, I believe is gonna work. So I leave it, take a break of like a week, refine my strategy, check what mistake I've made, and then I come back and get another challenge account. I think I started with like the 60K account and then I graduated to the 100K account. And the price is quite good. The profit target for phase one is also good. I haven't tried the other types of the accounts, but I'm still trying to read about it and learn about it. But for now, it's just the high stakes. And then immediately after I passed a funded account, and then I took a few trades and I was in profit. So that excitement got me. So I just left the account. I say I'm going to take this withdrawal first, and then immediately my the amount I used in purchasing the account was refunded to my account as a credit, and then it was there for me to trade with and withdraw anytime. And I placed my first withdrawal. It was the same day as the withdrawal that I got the money. So I was really happy with 5%ers and then my second payout as well. And consistently now, I've been managing the 100K account, which I'm very happy with 5%ers. And that is where I am currently with 5%ers.
All right. Well, thank you for that. Thank you for the kind words there, and I'm excited to go into the dashboard. You know, the Fiverr's dashboard. Maybe look at your account. This is it. So that's the first one here. This is the funded high stakes. Let's take a look at that one.
Okay, so I'm just gonna click on dashboard.
All right, nice.
It's my dashboard.
Looking good. You are halfway to target. It looks like you got very close to the target. So the target is 110. Did you? It looks like you almost reached that target, right?
I did hit that target. In fact, I've passed that target. I think I made over 11% or close to 12% on the account. But my strategy, I don't have a specific target that I'm targeting each month. So I just trade the account. I use a dynamic risk to reward. I have what I call high probability trades and low probability setups. So if I find those high probability setups, I try to risk a maximum of 2% per that trade. And then the low probability setup, sometimes I risk even less than 0.5, sometimes 0.5, and sometimes 1%. But averagely, my risk on the account is 1%. So I hit that target, I was up, and then I got a lot of setups. They were all low probability. So I was using 1%, sometimes less. And then I think throughout last week, I kept taking losses back to back. But because of my risk management, I was still in profit. So that was why it went down from the target. But I believe with my strategy, I'm still going to hit the target. So I'm just consistent with the risk to reward and then the risk per trade.
Let's take a look at the statistics there if you scroll down a little bit.
Yeah.
So we got total trades of 37. We got a win rate of 37 points, so around 38%, and a profit factor of almost 1.5. Yeah, that's good. I mean, you can continue. I see that you've had many losses in a row right now, but those were small losses, and it seems like you got your risk management system figured out here. You can take many losses in a row without losing the account or without giving back too much of your profit. And that's obviously very important to have a good risk management. So maybe we could take a look at trading view, because I'm sure a lot of people now are thinking, you know, what is your system like? How are you trading? So maybe we could switch over to trading view and we could perhaps look at a couple of trading examples or setup examples.
So I do not have a specific pair that I trade. I trade all 28 Forex currency pairs, and I trade indices sometimes. I've got US 30 and NAS 100. I trade Bitcoin sometimes as well, and then I've got gold. So let me look for just one pair and then I'll analyze it. All this, I arrange them in order of priority, whichever is the setup is almost at. So the strategy that I use, I think most people know it, is called the QMR. That's the Quasimodo reversal strategy, which basically I'll go on the higher time frame. I start from like the daily time frame just to know the direction. of where the market is going to and where the market is coming from. I don't specifically follow the trend. I just try to follow the market. So if the market is in an uptrend and then the market has already bought and I can see some signs of reversal, then I'll be happy to sell. And if I can see that the market is in an uptrend and the market has retraced to a reasonable point and I think the uptrend is going to continue, then I'm happy to buy. So I'm just going to show you a few examples. So on the daily time frame, I can clearly see that this market is now on an uptrend, currently on an uptrend. So I'll go down to the 4-hour time frame just to be sure and see everything how clear it is, and then I'll start marking my zones. So the market is still an uptrend. From what I can see, the market has already moved up, and then what I'm anticipating is a retracement before the continuation of the uptrend. So wherever the market is, that is where I want to focus on. I don't usually go below 4 hours in marking out my zone, and then I try to take my trade on the 1 hour time frame with confirmation. So on this trade here, this is Australian dollar against the New Zealand dollar. Sometimes I like to trade these currencies, even though the spreads are quite much, but they are very slow and they range a lot. So if the market has already moved in one direction, there is high probability that the market is going to reverse in the other direction. So I try to mark out my zone. So I always look for a sweep of a high or a sweep of a low. So example is this high. This is like a high here, which got swept. And then I mark like an order block where the market was going, and then I just mark it on either the 4-hour time frame or the 1 hour time frame. I go down to the 1 hour time frame for entry sometimes because the 4-hour time frame gives a very large stop loss. So if I mark this last up candle, which is an order block, all the way here, I always look for like a sweep of liquidity because I believe everything that is on the chart is liquidity, highs and lows, and market sweeps then mark the order block all the way to the present market price. And I always look for liquidity because I believe everything on the chart is liquidity, sweeps of highs and lows. So whenever a high is swept, there's high chance that market is going to reverse in the opposite direction because the currencies all fighting to be in equilibrium. So one currency cannot just keep moving, the other currency doesn't fight back. So that is what I believe in the market, and that is what I always look for. So I'll look for liquidity resting just before my order block, and then once that liquidity is swept, what I look for is confirmation. So in this instance, this is the order block I marked on the 4-hour time frame, and then this is the liquidity that is closest. So I use my fib level just to know where to get into the market. I mark it from the high. I call this high the protected high, which my stop loss is just going to be above. So I carry my fib level. I tweak it just to be from 150% and 100%. So I draw my Fibonacci tool from the beginning until the break of structure of the previous low that was swept. And then what I want to see is that the liquidity resting is very close to the 50%, which in this case is very close to the 50%, and I just mark it. I wait for the market to get to this place, and then from here, I start looking for confirmations. What I use as confirmation is called pseudo order flow. So I gave it that name, pseudo order flow. So basically, I'm trying to see what the buyers and the sellers are doing in the market. By doing so, what I'm looking for is multiple wick rejection. Whenever the market gets to my zone and I see multiple wick rejection, I know the market is ready to reverse. So majority of the time I trade a reversal pattern, and then I always look for the best entry that I can get, because that's what is going to help your psychology. You won't remain in drawdown for a very long time. And then I try to use a substantial loss stop loss, which is going to cover for any ranging that market is going to do before market eventually moves. So this trade, I took this trade on my account. I usually go for 1 to 2, but I try to take profits at least 1 to 1. I take half of the profits, and then I leave half of the profit to go all the way to 122. So when the market got onto this point, I took half of my profit and I let the rest run. So majority of my trade, all of my trades come in this fashion, and I don't trade any other strategy. This trade was my last trade on the 100K account that I eventually lost. Not because I was wrong per se, but because my stop loss was way too tight. I was supposed to at least cover this high a little bit more, and the market just came here, took me out, and then reversed back because the market is on an uptrend, but the market has moved up, and then I was expecting like a reversal and a continuation to the downside. I'm just going to switch onto the daily time frame. So yeah, so this market is completely on a downtrend. It has retraced a decent amount that I feel is enough for me, and then with my strategy is the same as the previous one that I shared, a sweep and then liquidity resting 50%. Yeah, and then confirmation with multiple week rejection, and then I get in. So majority of the time my entry is very good. It's just the psychology to hold the trade all the way to take profit. So one thing that I use is just a large amount of stop loss. It's going to help the psychology a lot because you wouldn't just get in a trade and then you get taken out and you want to go into another trade immediately. That's what happens to majority of traders, and they keep losing accounts because they've lost money and then they want to get it back immediately. But if you give your trade enough room to breathe, before it even gets to hit the SL, you probably have another good setup. So all of my trades are in this fashion. So I just mark them out and then wait for the right time. And then I eventually take the trade. So this trade as well was a trade I was on, but I had to close it because there was a news that was coming up, and I calculated what might happen. The spread is likely to take me out from the trade with my stop loss. So that was why I took it out. But all of my trades in this fashion using the QMR strategy.
Right, interesting. And which pair do you trade? Do you have? I see that you have quite a big list of pairs, but do you have any favorite pairs you like to trade?
Yes, of course, I love to trade GU and EU, not because of any reason other than the spread. So I like to trade all the major currencies, all currencies containing US dollar, because the spread is better. And I really like to get in my trade without too much drawdown. I just want all the odds to be in my favor. That's why I like to trade them. But if there is no setup, like on GU, EU, I'm not even having any setups soon. So I'm not trading them, but they are my favorite pairs. So like this, okay, this is Euro GBP. I'm just trying to check GU to see if there's anything that I've marked out. So this is EU. Yeah, EU. Oh, this is Euro GBP. Yeah, so this is Euro USD. I basically have nothing marked out because there is nothing working close to my zone using my strategy. So I just let it be. And then I focus on the pairs that have my setups. Because majority of the time, if I hit stop loss or I get taken out, I'm very confident that it's my strategy that made me pass phase one. It made me pass phase two, and I've withdrawn multiple times with this strategy, so it's definitely working. It's just part of trading that sometimes you're going to take some losses, and that's why risk management is there. So basically that's what I do, and then I try to keep my risk to reward realistic, at least 1 to 2. And basically that's what I do. I don't have a specific favorite currency pair, but I just use all like the same thing. Even on this EURJPY, this is the same thing I'm expecting. Price has swept this high. There's a liquidity here resting close to 50%. And this trade is slightly aggressive because it's high probability, and that's why I'm risking a lot. This will probably be like a 2%. That's why my stop loss is this tight. If I'm to use like 1%, then it's going to be around here. But majority of the time, I don't get this kind of trade. So I risk even less than 1%, 0.5 to maximum of 1%. But for high probability trades like this, I risk a little bit more. And majority of the time, it runs in my favor. And if it doesn't, I still have everything calculated and worked out. So it's just part of trading.
Right. Okay. Yeah, I like that. So let's talk about your risk management strategy here. You talked about how you're taking some profits at one hour and then you're letting the rest of the position run to 2 hour, right?
Yeah.
Do you have any?
So I've just recently inculcated this risk management in because of the cost of the trading, which majority of the time is swap. For me, like intraday trader, I noticed that if I'm taking trades like this with, let's say, a high stop loss and I'm targeting a higher risk to reward, it's likely going to take a few days. Sometimes the movement happens in just one day, but it's going to take a few days to build up before that movement occurs. So sometimes the market already comes one to one, and then if I break even, the market reverses. It's just going to break even, and then I don't try to give my trade a second chance. I believe that I marked everything out. It's either going to just work or hit my stop loss, and then I'm going to look for other setups. So this risk management now that I've just recently brought has brought me down to 1:1.5. That's 1 to 1.5. If I hold just 1 to 1, 1 to 2 without taking profit is purely 1 to 2. But if I take the profit early, I'm risking 1%. If it's gotten to 1 to 1, I'm taking 0.5 out, and then I'm allowing the rest 0.5 to go all the way to 2. So in actual sense, the rest of the trade is going to be another 1%, not 2%. So that's going to bring me to 1:1.5. And if the trade reverses to break even, I already broke even on the trade, so I've made 0.5% without breaking even. So it's just a dynamic risk to reward that I'm trying to bring see that it works, and it's actually helped me maintain my account in a style that is not just going down, and then my equity curve is slightly good.
Okay, great. So now before we wrap this up, I'd like to ask you about any like what was some psychological issues that you might have faced in your trading journey and any solutions to that you've experienced?
Yes, trading psychology is a huge part of trading. Like it comprises of a huge percentage of trading in terms of the strategy, the capital, and things like that. Psychology is very, very important in trading. I've had lots of issues with psychology in the past where I take trades and then I revenge trade, want to take the trade. Sometimes it's not actual revenge trading, it's just that you probably give your trade a second chance, but without properly analyzing to see what the current market price is doing. So that is part of psychology, revenge trading, and then over leveraging and then risking way more than you can afford to lose just because you are calculating the profit. I never calculate my profit, I always calculate the loss instead, and then I see what the market gives me. So that is how you're going to be able to deal with your psychology. You just know that you follow your plan. If you follow your plan, even if you lose a trade, because you know that you're following your plan, your psychology won't be affected. Like most of my trades, I already marked it out. I've planned. I know that if I don't get trades in 1 week, I'm comfortable and okay with it. I'll wait until those setups come before I take them. So number one thing to tackle psychology is planning. Immediately you've planned well, you will not find yourself risking too much. You will not find yourself over trading. You will not find yourself doing things that is just going to mess your day up and things like that. It's just following your plan. You sit down. Majority of people know what the right thing to do. They don't just do it. They know the actual thing to do. They know the exact risk they are supposed to risk. They know their risk tolerance. They know what they want, but they won't just do it. But if you follow your plan, you stick to it, then you'll be able to manage your psychology so well. I've been able to adapt, not completely because it's almost impossible to master your psychology 100%, but I've been able to up to a very, very high percent.
All right. Well, thank you, Michael, for doing this interview. And for everyone watching, make sure that you hit that like and subscribe if you want to see more interviews like this one. Thank you, Michael.